Good morning or afternoon, everyone, and welcome to the SOC It to Them, an overview of Service Organization Control Reporting webinar hosted by Hein Associates. I'm Shannon Reddy, your moderator and webinar organizer today. Before we start, let's take a moment to cover a few housekeeping items. All audio lines are muted. Please use our chat feature to ask questions during the webinar. We will save time at the end for questions and answers. This webinar is being recorded. Links to the webinar slides and the recording will be sent out to all registrants later today. Your active participation is important throughout the session. In order to receive CPE credit for this session, you will need to be connected for a minimum of 50 minutes and must answer 75% of the polling questions included throughout the presentation. Immediately following the webinar, you will be directed to a survey page where you can leave comments. Please check your inbox later today for a follow-up email that contains an evaluation form that must be submitted in order to receive your CPE certificate for the course. Our presenter today is Mark Hurst, a Managing Director in our Dallas office. Mark has been part of Hein Associates since 2008. With nearly 30 years of experience in consulting on finance, technology, and organizational management, he specializes in assisting companies with implementation of internal controls. Always putting his clients' interests first, Mark ascribes his success to his dedication to serving clients and his persistence in helping them achieve their goals. He previously worked with international accounting firms as well as communication firms, and currently serves clients in a variety of industries, including telecom, healthcare, finance, and the oil and gas sector. Mark holds a Bachelor of Administration from Baylor University with a concentration in finance. He later earned his Master of Business Administration from Southern Methodist University, also focusing on finance. He is a certified Information Systems Auditor, CISA, and throughout his career has been published numerous times on IT, internal controls, and financial topics. Before we begin, we would like to ask a few questions to understand the attendees for today's webinar. Please answer the following 3 questions as they appear on your screen. The first question is, do you work for a service organization? Yes or no? Please use the buttons to vote. Thank you. Next question. Does your company utilize SOC reports from your service providers? Parentheses, user entity. Please select yes or no. And our third question. Have you read a SOC report and or are you familiar with its content? Yes or no. Thank you for your responses. We appreciate you attending today's webinar, and now I would like to introduce Mark Hurst.
Thank you, Shannon. Good morning, everybody. I'm, West Coast, and good afternoon, you guys on the East Coast. As Shannon said, my name is Mark Hurst. I wanted to quickly review the objectives for today. First thing is we're going to talk about an overview of the 3 types of SOC reports and what their purpose is and what their focus is. SOC report stands for Service Organization Control Report. So that's what SOC is. We're also going to cover recent review of AICPA changes to both the SOC and the SOC 2 reports. and then we're going to talk kind of high-level SOC reporting engagement steps. So that's what we're going to cover today. Just quickly, it looks like from the polls that about 30% of the listeners out there are from service organizations, that about 50% of the folks out there are utilizing these reports, and it looks like about 75% of you guys are familiar with the SOC report.
Thank you. Our additional question we have right now is, what does SOC stand for? Please use the buttons to select status of control report, save our county, save your oyster ketchup, or service organization control report. Please use the buttons to vote now.
Okay, that's a good start. Looks like we got 100% on that one. So I'm going to start off with just a quick definition of the three separate reports. It's kind of alphabet soup out there, the way we've organized these things through the AICPA. But the real difference between these reports are the focus of the reports. And I'll start off with the SOC report, SOC 1 report. The SOC 1 report is also known as the SSAE 16 report, and soon to be known as SSAE 18 report because of the changes that will be effective May 1st. In the past, they were also called SAS 70 reports. But these reports, their focus is on internal controls as it relates to financial statement reporting, and that is a big point to make. They are also performed under the guidance of the SSAE 16 and soon to be SSAE 18 attestation standard. Now, a SOC 2 and a SOC 3 report, its focus is more on operations and compliance. And there's something called trust service principles out there, and there's 5 of them. It's security, availability, processing integrity, confidentiality, and privacy. And so it focuses on those trust service principles. Now, the difference between a SOC 2 and a SOC 3 report is really on the audience of the reports themselves. A SOC 2 report is what's called a restricted use report, and a SOC 3 report is a general use report. We'll get into that here in a little more detail. I get asked all the time when we start these engagements, the initial discussion is, well, which report do I need? Do I need to use a SOC 1 report or a SOC 2 report or a SOC 3 report? And the best way to guide a service organization through that is to, number one, understand what the purpose of the report is. That's the focus that I just mentioned. Is it for financial statement, internal control purposes, or some other purpose? And then the second question is who's requesting the report? Who needs this report from your client organizations? If it's the financial auditors or the finance team, then it's more likely going to be a SOC 1 report. If it's more on the compliance side or the IT organizations, then typically that is usually a SOC 2 report. And then obviously the scope, what's the scope covered?
We have our next question. Can you please name the types of service organization reports? Please choose from SSAE 18, SOC 2, SOC 3, or all of the above.
Okay, good. We did pretty good on that one. I guess I should point out here, on the questions, in order to get credit, you have to answer them, not necessarily right or wrong, but we're really looking for whether you answer the question or not. But it looks like the majority of the folks out there answered that one correctly. As I mentioned earlier, there's 3 types of reports. I'm going to start and go a little more deeper into the SOC 1 report. Now, within a SOC 1 report, it's called Type 1 and Type 2. A Type 1 report, SOC 1 Type 1 report, is focused on the design of internal controls at the service organization. It doesn't say that they're operating effectively. It just states that they are defined and identified out there. A Type 2 report, which is a much stronger report, looks at whether or not the internal controls are actually operating effectively. Have they been, are they operating effectively? So if you're a user of these reports, you will typically want to see a Type 2 report. I have a lot of clients that we will do a Type 1 report for initially, and that really demonstrates to their customers that, hey, they've started this process. We've published the initial SOC 1 report, and a SOC 1 Type 2 report will follow shortly. So anyhow, that's Type 1 and Type 2, and this is also applicable to the SOC 2 reports. Also, with SOC reports, we also look at something called subservice providers. And a subservice provider is basically a third-party vendor that you're outsourcing a portion of the process to. So the service organization is actually subbing out a portion of that process to another vendor. And the concept here is, as a service auditor, are we going to include those processes that are subbed out? Are we going to include those in the report, i.e. carve them out, or are we going to do something called the inclusive method and include them in the report? So that's an important concept to understand. And then the last concept here is restricted use report. These reports are typically restricted to your clients and to management. And the reason for that is that the users of these reports will have more an intimate knowledge of their internal control environment and the internal controls needed from the service provider and how it interacts and reduces and mitigates risk within their environment. So that's a little more detail on the SOC 1 report. Additional requirements for a SOC 1 report is, as I mentioned earlier, the SSAE 16 is an attestation standard. So that's the standard this is performed under. The guidance also permits the use of internal audit. However, the service auditor is responsible for the testing and all the work that the internal auditor performs, very similar to financial audit. So the service auditor will be responsible for getting comfortable with the experience and capabilities of the internal audit organization, and then will oversee any testing that is performed by that internal audit function. The sections of the report, there's 4 sections of the report. The first section of the report is the opinion letter, and that's responsibility of the service auditor, and it will state whether or not it's a qualified report or unqualified report. Your service organizations are going to want an unqualified report, as is the user, and that means everything tested out properly. A qualified report means that there are some exceptions that will impact some of the internal controls. The next section of the report, or second section of the report, is called the system description. Now, the system description is the responsibility of the service organization, and it is a narrative or description about the internal processes and internal controls in place at the organization, at the service organization. Also, there is a written assertion by management of the service organization, and that's included within this section of the system description. And then the third section of the report is the responsibility of the service auditor, and that is the actual internal controls and the mapping of those internal controls to the control objectives of the report. And it also lays out the testing procedures that the service auditor performs and the results of those procedures. So as a user of the report, it's real important to go through that table toward the end of the report and understand, which controls are operating effectively. If you see any that have exceptions noted, then you need to key in on those areas and understand if it impacts you as a user of the report and how significant that impact is. So there are new guidance coming out effective May 1st for SOC reporting, and the biggest impact is the requirement for a vendor management policy. What this means is that service providers are now responsible for overseeing and monitoring the use of third-party subservice providers or third-party vendors. So there needs to be a vendor management policy in place. There needs to be some type of monitoring, as I mentioned. So ways to monitor vendors can include obtaining a SOC report from those subservice providers. That's probably the best way to go about this, to ask them for their SOC report. You want to also be, holding periodic discussions with those subservice organizations to understand what internal controls are in place there and how it impacts the service organization. Having your internal audit team going out and audit those service organizations, subservice organizations, if there's not a SOC report available to you. And then just any external communications that may exist out there and any complaints or impact to service levels, that service organization needs to be on top of that and have processes in place to monitor that.
Next polling question. The focus of a SOC 1 report is the internal control related to, please select from the below, a government reporting, financial statement reporting, security, or compliance.
Okay, super. The answer to that one is financial statement reporting. Focus again on the SOC 1 report is on internal controls that impact a service organization's client's financial statement process. So we did pretty good on that one. So next I'm going to move into the SOC 2 and 3 reporting and do a little deeper dive there. First, these are attest engagements. They're performed under the AT 101 attest engagement standard. This standard will be, was updated in December, and I'll talk a little bit about those changes here in a minute. The focus on a SOC 2 and a SOC 3 report is on the trust service principles. And there's 5 of them. The first one is security. Second is availability. Third is processing integrity. Fourth is confidentiality. And the 5th one is privacy. Now, a service organization can pick 1, 2, 3, 4, or all 5 of these. So it's really up to the service organization to determine, from a risk perspective and how it impacts their clients, which one of these principles are most appropriate. So from my experience when I'm initially working with service organizations, we'll go in and we'll have a discussion, which of these principles do we want to cover? And most of the time they say, well, we want to do all 5 of them. And it's like, well, we want to make sure that the principles are appropriate for the report and those type of things. So anyhow, again, the focus of the SOC 2 and SOC 3 report is on compliance and operations as opposed to financial statement reporting. So what are these 5 different principles? What do they mean? And how do they impact the internal control environment? So the first is security, and security's really we're looking at physical security and logical security. The logical security, we typically will look at the network security, the security to a specific business application. That's the application that the customers are using to process their transactions. We look at also the database security and those type of things. Availability, it has to do with, is the system available as it relates to any service level agreements or SOWs that have been established with the service organization's clients. And so we look at, how is the system available? Processing integrity has to do with inputs and outputs. The best example I like to use on this one is, let's say you're a billing or invoicing service provider, and your client provides you 100 records to process. Well, I get 100 records in, I should get 100 records out. So is the processing integrity, is it complete and is it accurate? So we're looking at counts and completeness and accuracy there. Now the next two, confidentiality and privacy, a lot of organizations have a lot of confusion around these. Confidentiality has to do with information that the client wants to maintain and keep confidential. This information is like proprietary manufacturing processes, it may be trade secrets, or it may be like a sales listing that they have that they don't want out there and that they want to protect. So that's what confidentiality means. Privacy, on the other hand, is tied to an individual, and the term is PII, personable identifiable information. A lot of times companies that process healthcare information will be very interested in this particular principle. HIPAA is a good compliance area for privacy. Financial accounting information is another area. Financial account numbers, individual social security numbers, credit card numbers, the information on the back of your credit card, this would all fall under privacy or PII information. So a lot of times I'll get into discussions with clients and they'll say, as I said earlier, we want to do all 5 of these, and privacy, that's certainly applicable to us. And there's a lot to these trust service principles around privacy. So the first question I'll ask is, do you have a privacy policy or do you have a privacy notice? And that's a good way to judge, are they ready for the privacy criterion? Or, where will they stand in meeting those principles? So a little deeper dive into the different principles. The first area is security, and it's commonly now referred to as common controls. And what happened several years ago, there's a tremendous amount of redundancy across the 5 controls. And as a result of that, the AICPA and the board there went back and they looked at, all right, where are these redundant areas and where can we streamline these? And as a result of that, we have fewer criteria now. But the first area is security or common controls, and it's organized in 7 different areas. The first area is organization and management, and this is kind of the governance of the information and how does management approach the internal control environment. The second area is communications. How does the service organization communicate both internally and externally about changes to their control environment, to the systems, and those type of things? Policies and procedures would fall in this area. Risk management and design and implementation of controls is the third area. This is does the service organization understand where their risks are and how those risks impact their clients. And this is really the foundation, the starting point of creating the risk, what I'll talk to a little bit here is risk and controls matrix. But anyhow, do they understand where the risks are? Do they have a process in place to continually revisit that and then link that to their internal control strategies? Fourth area is control monitoring. Are they constantly monitoring the internal control effectiveness within their organization, within their control environment? Logical and physical access is the fifth area here, and this is again, relates to logical and physical access, security access. Access to a building or access to an application. Is it controlled? Systems operations is the sixth area, and this is just how the service organization is managing the actual operations. Let's say it's a system, the batch processing, online processing, failures, and those type of things. And then the last area is change management. Change management is a big one for technology service organizations, in particular if they're writing or developing code. So if they've customized any applications that support the service that they're providing to their customers, then this is a high-risk area and one that a lot of focus will be put on by the service auditors. So anyhow, these are the security principles. The next page here is basically shows all 5 principles and the number of criteria within those principles. And so what I'm trying to show here is that the 2 largest areas or the 2 largest principles are security and privacy. Within security, there's 27 criteria. Again, I keep calling it security. The other word out there is used as common controls. But there's 27 criteria out there. And on the other end of the extreme is privacy, and there's 20 criteria that link up under privacy in 8 categories. And I'll go through those here in a minute. The availability, processing integrity, and confidentiality are small compared to the other 3. So to have one of these reports and add availability, processing integrity, and confidentiality, it's really not that much more significant effort to add these additional principles if need be. One other point I guess I'd like to make on this slide is these principles and criteria have been streamlined here recently. And when we first started the SOC reporting, the SOC 1 or SOC 2 reporting, our reports would be over 200 pages. And majority of that, or the bulk of that, is the table, that third section of the report with the controls and how they relate to each of the criteria. There's just tons of redundancy. And so here recently with the changes, we've reduced a lot of that redundancy. And now the reports are much more manageable to produce and also to read. So a 200-page report may be 125 pages now.
We have our next polling question. Name one of the trust service principles: security, availability, processing integrity, confidentiality, privacy.
Okay, perfect. I don't think anyone could get any of those wrong. So next I'm going to talk a little bit about I think I flipped one too many. Yeah. Next we're going to talk about the privacy principle. As I mentioned earlier, they're organized into 8 different categories. Privacy, again, has to do with personable, identifiable information. And most of the criteria is related around a service organization's privacy policy and also their privacy notice. And it's organized, number one is do they have a notice and do they communicate commitments and system requirements to their users? Choice and consent is an area. A lot of times when you go into a doctor's office, you have to sign the HIPAA agreements. They're asking you and saying, all right, do you give your consent to us to provide your information to an insurance provider or to a referring doctor? This is where you're giving your choice and consent to how they utilize your information. Collection has to do with how you're collecting that information and what are you doing with it. Are you using it and selling it to third parties for marketing purposes? Maybe the user doesn't want that to occur, so this is where all that is communicated. Use, retention, and disposal. How long are they going to keep the information? How are they going to dispose it? And those type of things. Access has to do with who has access to that personable, identifiable information. Is it just the service organization? Are there sub-service organizations that they've subbed this out to, portions of this out that have that visibility into the information as well? Disclosure and notification has to do with if personal information, identifiable information is compromised, what processes do they have in place to notify that those individuals that have the information compromised will, be communicated that that information was out. Quality of information is, how's the quality of that information? How is it processed? And monitoring enforcement has to do with, how's the organization monitoring those privacy criteria and their privacy processes so that they know they're effective. So a little more on SOC 2 reporting. SOC 2 reporting, again, there's two types of reports. There's I think I flipped one page. Okay, sorry about that. I got ahead of myself. SOC 2 reporting, again, it meets a broad range of users that need to understand the internal controls at a service organization as it relates to these 5 trust service principles that I mentioned. The primary users of this are, your clients, any regulators out there, business partners, suppliers, etc. It really forms an important part of the stakeholders, the oversight of their organization. It plays into the vendor management program of your clients and any regulatory oversight. So again, a SOC 2 report can be both a Type 1 or a Type 2 report. I won't spend a lot of time on this, but again, the Type 1 report has to do with design and controls. Are the design and controls, are the proper controls out there to satisfy these criteria? And then the Type 2 says, all right, the controls are out there, are they operating effectively? Many of the requirements for the SOC 2 are very similar to a SOC 1. Again, these reports have a tendency to be restricted use reports. They're only intended for the service organization's clients and their management teams. And the way these reports are structured, they're structured the same as a SOC 1 report. You have the opinion letter that's up front, that's provided by the service auditor. You have the system description and the assertion by management. Again, the system description is just a narrative that covers the processes and internal controls in place at the service organization and how they satisfy the selected criteria. Also, a good point to make here is that a SOC 2 report can also be expanded beyond the 5 trust service principles, and you can incorporate other frameworks in addition to those 5 trust service principles. Items that you would typically see are HIPAA. Cybersecurity is a big one. There's actually a specific program out under the AICPA for cybersecurity, GLBA, and just other frameworks that are out there that would be interested by clients and service organizations. So SOC 2 changes that are coming into play effective May 31st. Well, actually, I'm sorry, these changes went into place mid-December of last year. What happened basically was a streamlining of the privacy principles. There was quite a bit of redundancy in there, and so they went through and restructured the privacy principle and the criteria within those and did away with a lot of the redundancies. And then also there were a few common controls or security principles that were reworded, and a few of them were eliminated. So that's the big change there. Again, monitoring on vendor management is also included in there as well. So the change really weren't significant, but the major changes was the reduction in redundancy, which makes it more efficient for the service auditor and also the users of these reports. Okay, the next we're going to get into the SOC 3 reporting. Now, SOC 3 report, its focus is the exact same as on a SOC 2 report. It's performed under the same standard, and it's based on the 5 trust service principles that we talked about earlier. The main difference is who the intended purpose of this report's for. A SOC 3 report is called a general use report. It can be used for marketing and for sales purposes. And so that's what you want to use if your sales and marketing organization is wanting to provide your report to non-clients. There's also something out there called a web seal and a SysTrust seal. You can actually put seals on your website that you click on, and it'll actually launch the opinion and the system description that goes along with the SOC 3 reports. So the big difference is on these reports is what's in it and then what's not in it. So for a SOC 3 report, you will get the service auditor's opinion, and you will get the system narrative that's produced by the service organization. What's not in there is the matrix that has the service auditor's testing procedures and how those controls link up to each of the criteria. So that's the big difference there. Okay, so just to summarize quickly on the 3 reports, the focus again you have is for the SOC 1 is on financial reporting. SOC 2 and 3, it's more on compliance and operations. The standard for the SOC 1 is the SSAE 16, soon to be SSAE 18. And then SOC 2 and 3 reports are performed under AT 101, attestation standards. For a SOC 1 and a SOC 2, you get an opinion, and also the testing procedures performed by the service auditor and the results of those tests. On the SOC 3, you don't get all that detail. And then the content, I just went through the content. So anyhow, that's a quick summary of the 3 reports. Okay. Next, we're going to get into implementation pitfalls. So the first thing you want to do if you're a service organization preparing for your first report is you want to start sooner than later. I get quite a few calls from organizations, and they're saying, okay, well, we have a contract in place. I need to have a SOC report, by the end of the year. And I'm talking to them in, November or maybe the beginning of December. Well, at that point, you're pretty much waited too long. So what you want to do is get started sooner than later. There's something called a readiness assessment that I'll talk about here in a bit. The second thing that as a service organization you'll need to do is to understand what sub-service organizations or what processes you're subbing out to others. So are you going to include those in the report, those sub-service providers, or carve them out? The majority of the reports that we do and that most service auditors do, they use the carve-out method. Next, you want to look at any of your contracts to see what you're contractually obligated to. In the financial services industry, a lot of the larger banks will have default contract language in there for their vendors and third-party providers that will state, that they need to get a SOC 1 report. A lot of them say SAS 70 still, but a SOC 1 report or SOC 2 report. So you want to look at those contracts and understand what the requirement is. You want to also understand if it's going to be a SOC 2 report, what principles are in scope and what makes sense for us for the services that we're providing to our customers. And then you want to make sure you have the latest and greatest criteria. If you're doing the SOC 2 report, these do change periodically, and you want to make sure that your service auditor is using the correct and the most current criteria that's been published by the AICPA.
We have our next polling question. Who can perform service organization reports? A certified SOC auditor, IT technician, CPA firm, any consulting firm registered. Please select your answer.
Okay, good. Majority folks out there answer that correctly. Only a CPA firm can produce these reports. It's the requirement out there by the AICPA. So next thing we're going to talk about is setting up one of these reports and what's the most effective way to do this. First off, there's something called a readiness assessment that service auditors can provide for you. And a readiness assessment helps the service organization prepare for this report. So it's actually not during the reporting period, it's prior to it. The readiness assessment typically takes approximately 3 months. I've done these where clients will drag it out for 12 months and 18 months. It's not really effective to do that because you lose interest and focus. So what we found is kind of the sweet spot is 3 months. The second is the goal is to create this risk and controls matrix. The matrix becomes the foundation of the report. So if it is a SOC 1 report, we're going to map or help the service organization map their internal controls to something called control objectives that is in the report. If it's a SOC 2 report, it's going to be to the criteria. So basically there's a matrix. And that's the third section of this report. That's the deliverable out of a readiness assessment. Third thing is to identify any business process owners and control owners within the service organization. Who is that service auditor going to work with, and who owns these processes and internal controls, and who's responsible that they operate effectively. Fourth area is to perform a walkthrough, is to walk through the process and to understand how the controls are working and are they really working as intended. A lot of times we get to this step and it's been communicated that the process or internal controls work this way, and then we find out it works a different way. So that's important to have that walkthrough. And then another effective thing that you can do to be efficient in this is to provide your service auditor any policies and procedures that you have in place so that they can read through that before they visit with you. And then if you've had any prior internal audits, is to provide those findings to the service auditor as well. So the next step, once we've prepared, we move into the actual report itself. So the actual report itself is the fieldwork, what's referred to as fieldwork. And the service auditor will typically come out 2 times during the year. One during interim, and the second is during what's called roll forward, very similar to a financial audit. So the first thing is to make this as efficient and effective as possible is to get the total populations, for those controls that require sampling to the service auditor before that visit occurs. And the reason for that is so that those samples can already be generated and you don't have to wait out in the field with your service auditor there in your office. The second area is to organize all your testing evidence and to organize that around each of the controls. What that does, it facilitates and organizes all the information. You quickly get to the information you need to test and just facilitates communication between the service auditor and the service organization. Also, any changes that occur within the in your control environment during the period, the service auditor has to test it the old way and then also the new way. So that's another issue that comes up every now and then, is that evidence under the old way is not kept. And so we, as a service organization, you need to make sure you keep all that so the service auditor has that visibility between the old way and the new way. A good point to make here is that testing for a SOC report, the service auditor tests effectiveness throughout the reporting period. So the opinion is, were the controls operating throughout the reporting period, which is different from a SOX engagement where you report that the controls were operating effective as of a period of time, as of the end of the reporting period. So anyhow, that's a big point to make there. So anyhow, that's pretty much what I have for you. I do want to let you know that I do want to let hello? Okay. I do want to let you know that we do post weekly helpful hints out on our website. So if you're getting prepared to go through this process, there's a new helpful hint out there every week. And that's another source for you. I am also always available to answer any questions that you may have anytime. After this presentation, there's my contact information is going to follow shortly. And then I hope, lastly, I hope you've learned something about SOC reporting, and I hope this is helpful to you. So I'm going to turn this back over to Shannon.
Thanks, Mark. We would now like to give our attendees a chance to ask questions. To ask a question, please submit a question via the chat box on the bottom left corner of your screen. If we don't get to your question during the webinar, our presenter will follow up with you via email. So Mark, we have our first question. How do you get ready for a SOC engagement if you have never done one before?
Okay. This is the readiness assessment that I mentioned earlier. Most service auditors will help you through this, but basically what happens is you need to identify what controls that you currently have in place, controls that are missing, and then what I call controls that are in flight or kind of in place but need to be shored up. And so there's really 3 buckets that we throw that in. And so during the readiness assessment, the service auditor will go. You may or may not have written policies and procedures. I've done these where the organization doesn't have anything in place. At that point, you have to write all those, and you need to have all those in place and really design from scratch. But most of the time, the controls will be in place. You just need to identify those and map those to the criteria or to the control objectives. And the service auditor can help hold your hand through that process, and that's what I would recommend that you do.
Thank you. We have another question. We process accounting for oil and gas companies. Most substantial clients would perform their own financial reporting using our system. It seems to me the SOC 2 would be more applicable than SOC 1. Can you comment?
Yes, I can. So there's going to be a couple comments on this. First off, there are some organizations. Well, I'll start this way. The AICPA states that if you are a financial auditor looking at the service provider for their report, that a SOC 1 report is the appropriate report. It is very clear on that, and I've communicated, and that's the response that I get back. So, but the first thing to do is to understand, again, who the users of this report are. Are they the financial auditors and the accounting departments of the client? Are they some other organization? Are they compliance or the IT organization? And then number two, what I would recommend is to understand what internal controls that your clients are expecting you to have in place as a service organization. You need to understand that. Make sure you have the appropriate coverage of the report in your report. And then the last thing I would point out on this is some organizations, it's not financially possible for them to have both a SOC 1 and a SOC 2 report. And in those cases, the service organization may provide, only a SOC 2 report.
Good, thank you. And we have another question. Our user is requiring a SOC 1 report type 2, but then lists many operational compliance requirements to be covered in addition. It appears there is some confusion over SOC 1 versus SOC 2. Does this make any difference for our report and our audit?
Well, if you're going to append additional frameworks or different processes, then that would be a SOC 2 report. SOC 1 report, that's not the purpose of a SOC 1 report.
Good. And we have one more question. If I receive a type 1 SOC report and I am a financial auditor, can I rely on that their controls are operating effectively?
The answer to that is no. A type 1 report, I got to be careful the way I say this, but it's kind of worthless. I mean, the type 1 report demonstrates that the service organization has gone through the exercise to identify what internal controls need to be in place. However, the operating effectiveness component is what, as a user of the report, you need to be most concerned about. Are those internal controls working, and are they operating effectively? So, from a user perspective, a type 1 report really probably not going to meet your needs. All it will do will demonstrate that service organization has started down a path and started the process, to hopefully eventually get that type 2 report. But no, you cannot rely on a type 1 for operational effectiveness. That's
right. We had one more come in, and that will do before we kind of conclude this. Mark, how long does the testing take, and what time of year do you come out and perform your testing?
The service auditor, and this is what we do, we typically will come out 2 times during the reporting period, once during interim. These reports are typically 12-month reports. Some larger organizations will get 2 6-month reports, and that has to do with the needs. That's driven by the needs of your clients, whether it's a 1231 financial statement or whether there's differences in that, but we won't get into that. We typically come out 2 times during the reporting period, once midway through the reporting period, and then once at the end of the reporting period. And I think this is pretty standard across all accounting firms. We come out, the field work will take anywhere from 3 to 5 days, usually about a week, some cases less than that. The service auditor is out there communicating, with the control owners and collecting auditing evidence. to help, meet, satisfy their test that they have designed. So that's both during interim and roll forward. Interim will typically also do a walkthrough. That way we will determine whether any control changes have occurred during the reporting period, and that's where we identify that.
Thank you, Mark. That's all the time we have for questions. Please check your inbox for a follow-up email with an evaluation form that must be submitted in order to receive your CPE certificate for this course. Thank you again for attending, and have a great day.